The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at Thursday's market trade action as we are broadcasting at the National Farm Machinery Show in Louisville. Joining us from his home office in Wisconsin, our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing, joining us. Bryan, good to catch up with you, sir. Hope you're having a good week so far. And market trade on Thursday, for the most part, looked fairly quiet. I know some different news items we're going to dive into, but overall, we'll call it a somewhat quiet day on Thursday, Bryan.
Let's call it consolidation in the grains today. You did have a little bear spreading in the beans. On the settlement, you saw soybean meal edge back to about steady. It's been beat up a little bit the last couple of days. Soybean oil was 50 to 70 points higher. But in corn, a little mixed close there, down a quarter in March. So again, consolidation, 676. Trading range pretty tight today. We had a 4-cent trading range in corn, so not much going on there. Soybeans, a penny or 3/4 of a penny higher in March. But a little strength in that November, up 8 3/4, maybe trying to start to compete for acres a little bit here. Beans slipped off that $14 mark kind of hard, if you might remember. And, all of a sudden we're down 1335 area. Now they crept back, so it's becoming a little bit more interesting between corn and beans. For what it's worth, Jess, not hearing a lot from our farmers that are telling us, boy, I'm really heavy corn, I'm really heavy beans. I think the general consensus is acres for both will be up some, probably around that 91, 92 on corn. Last year, we were about 89.6. So a little bit of an increase there is what we probably look for. We'll get more information here at the end of February in the outlook meetings from the USDA, and then, of course, farmer-led survey on the March 31st acreage report.
Definitely. Well, in the case of soybeans, you mentioned some of that bear spreading on Thursday. And South America, I know Argentina is going to go dry again here for another week. And we've had a little bit of a slow pace to harvest in Brazil, although it doesn't seem like the trade is too concerned about that here as we work through this week. It feels like we're going to get that big Brazilian crop harvested. But, we watch South America. Are we waiting to maybe see just what happens here a little bit in the trade right now?
I think that's certainly feasible and a realistic expectation. Something that we looked at today were export sales. So now they're through last week, right? But when you looked at soybeans, 18.8 million, not a bad number, but not a robust number. And what I want to point out is that year-to-date sales of beans, 1.767 billion bushels, pretty good number. Last year at this same time, 1.7665. The reason I point that out is last year we really started to see exports pick up because Brazil went dry with the La Nina pattern. That's not the case this year. So if you're looking for some kind of a repeat there, that'll not be the case. Probably the weather market that could exist in Brazil would just be very substantial rain that really limits or drags out the harvest. And there's been some of that, but I don't think that you can at $15 plus beans, you can really hang your hat on that right now. And so it's kind of a no news market right now is what it is. But the export sales all year had been running ahead of last year. Now we're seeing where last year, those numbers are now going to probably outpace where we're at this year.
I saw we did get a daily export sale to unknown on Thursday morning. So something else of note in the bean market. With bean meal, I know we've touched up against this $500 a ton mark. We've gone over it a little bit. Feels like, though, we don't move much past that. Now we come back a little bit. Does that feel like the resistance area where demand starts to dry up a little bit in the soybean meal market, Bryan?
I don't know how it doesn't, because it's a high price. So the only time you really see increasing demand is if you see the market chasing supply, and that is buying basically at all costs. Make sure you have it. I just don't think we're in that environment. We know the Argentine crop is likely to be smaller. We know the Brazilian crop is likely to be larger. And then, kind of an interesting thing reading some this week here, it looks like India, of all places, have been picking up some of the slack on soy meal exports. Their export sales are up year to date. So when you kind of step back and look at it, it's not quite the same marketplace we saw last year. Last year at this time, we were getting very concerned about the buildup on the border in Ukraine. The market was pricing in some uncertainty. We had crop condition concerns in Brazil with drought, and then you had a real sort of uncertainty yet as to what the farmer had on hand. And we saw these big basis levels starting to percolate and thought, well, maybe the USDA overestimated the crop, or maybe the carrying was actually smaller. And it turns out it's probably a little bit of a combination of both. You don't have quite that uncertainty this year, even though in January, if you might recall, the USDA made a pretty bold move and reduced harvested acres in corn by 1.6 million. That's a big move. So we thought maybe February the USDA might take those numbers and massage them a little bit. We didn't see any change in February, so it looked like that might have been it.
In KC and spring wheat on Thursday, we had a little bit of strength there. I know this winter wheat crop in the plains going to start coming out of dormancy in the next couple of weeks. I wonder if that's going to start having an influence a little bit more on this trade. What's your thoughts in this wheat market after Thursday's action, Bryan?
I think the market will start to pay a lot more attention to rainfall totals, and then as we come out of dormancy, and then what does it look like? So talking to a producer in western Kansas today, he said everything is powder. They've had days where the roads are closed because it's so dry, it's just blowing dirt. So this is a shrinking drought map, but that area continues to stay very dry, and they're struggling to keep up with even irrigated wheat to keep enough water on it. So probably not going to be one of our banner winter wheat crops, and the market may show more reflection in that, or potentially some more type of spread activity where what you'll see is for instance, you might see Kansas City wheat higher one day, Chicago wheat down. Chicago was down 4 today, Kansas City up 4. So prime example today of what that looked like. Probably just a reflection of good rains in parts of the Midwest for the soft red and not good rains for the hard red.
With the corn market too, I know you touched on it a little bit, but I want to talk there. I can't count. I lost count how many days I've seen, front month futures in that 670, 680 range, and then the new crop somewhere 590 to 6. I mean, it just doesn't seem like this corn market wants to really move much one way or another, and that was the case again on Thursday, Bryan.
Yeah, and we've talked about this before. One of the problems you have in a tighter supply crop at higher prices is that spring is kind of compressed. It can move higher. What can happen is what's been happening in the corn market is prices gravitate in March toward the 685 and 690 area. You're just not finding new buying interest. When it gravitates lower, selling interest kind of dissipates. I think part of that combination of selling, some of it comes from the farmer. I've talked to plenty of farmers who've said, I don't want to be the guy holding that big inventory this year if this thing tips over. They just don't feel good about new crop input prices, don't feel good about, kind of the world market, what that looks like, black swan events, war, whatever. So I think the farmer's been really responsible. I'm going to call it responsible and not taking this, massive risk holding big inventories. And that in part has kept our market in check. It seems like the whole world's kind of holding their breath, waiting to see what the next few months bring as far as the South American crop and then how it looks for the beginning of our crop. I guess I'm going to kind of argue that on the new crop prices, they are priced where they are. That is a discount to the old crop because the end user just isn't willing to pay more than what it is right now. So you look at beans, $13.85 on the board. That's old new crop. Old crop, $15.25. Big discrepancy. Same thing in corn. You have that big discrepancy there, basically $5.95 to $6.76. But the world is betting on a couple of things, or at least the end user is at this point, and that is that the U.S. producer and all producers are going to do the best they can to produce a new crop. So you're betting on the producer, genetics, tillage practices, equipment, and you're going to assume, I think, until proven otherwise, that we'll have more, maybe a little bit more shift toward normal weather, and the shrinking drought monitor map would tell you that.
Bryan, how much are you watching this crude oil market? It feels like we found a little bit of support right below the $80 mark. How much is that playing into commodities in your mind?
Well, it is ultimately supportive for corn and the crush and the use of ethanol, and that's all good. The issue with getting too, let's say, enamored with crude oil prices holding on to, supporting corn prices is, again, one of these anecdotal things. But if you look at the price of natural gas, it is plummeted, and it's a component to producing a corn crop and drying a corn crop. So when natural gas goes from $5 to 2.5, that's a big deal, and that's what's happened in that market there. So ultimately, the energy market doesn't look like it wants to get much below the mid 70s. There's talk of the administration wanting to fill up reserves if it gets down towards 70s. So it's kind of the Biden put, if you will, in the crude. And then we go back to the war, and what does that look like? Just some to me, escalation in the war. Just reading out of the Forbes, well over 200,000 Russian soldiers alone may have been killed or injured, and it's just devastating. So hopefully this wraps up soon. That's just the Russian soldiers.
Well, we are having a conversation today with Bryan Doherty of Total Farm Marketing as we broadcast live at the National Farm Machinery Show in Louisville, Kentucky. Bryan, I know this week we've had a slew of economic data out. The Producer Price Index came out on Thursday, showed a hot inflation number again, up 0.7% month on month. That headline number was 6% year on year in January. Feels like, though, with all this inflation data, economic data this week, that the commodity markets, for the most part, have digested it fairly well, at least it looked like to me.
Well, I think if you look at the idea, okay, maybe raising interest rates again. If you look at the dollar, so the dollar has been a pretty strong reflection of inflation and rising interest rates, and sort of this hawkish mentality of the Federal Reserve that you need to raise interest rates to combat inflation. So the general wording, though, that at least I'm gathering out of the Federal Reserve is that interest rate rises are likely, but they're going to be small in nature, not these real, what we saw 6 months ago, where it's just one, 3/4 or half after another after another. And so when you look at the dollar did bottom here in early February after it peaked in September, was in a nice downtrend, bounced up here, but it bottomed at about what we call 100, okay, or 100.1. That's the index, and around 103. What it peaked around 114. So the dollar's kind of percolated up some, but it hasn't taken off. And I think that's why commodity prices, you could argue, are holding despite this inflationary concern. And then there's also the mentality that you want to own raw commodities into inflationary periods. I'm not sure at these prices, how many beans do you want to hold at $15+? I'm not sure I buy into that.
Let's talk about the livestock market. Cattle trade was mostly lower on the day Thursday, seeing a little bit of cash activity in the north, some bids starting to develop, but overall, that's pretty quiet. What's your thought in this cattle market here as we near the end of the week, Bryan?
It's the same thing as we saw in the grains. Consolidation, not a lot of excitement, nice uptrend. You can take a look at any of the live cattle contracts. New contract highs established either this week or last. Things look firm underneath. We're expecting cash cattle prices. We're hearing whispers in the upper 60s, and so we at least it looks like that's going to continue to be the trend for right now. That the market is supportive of cash cattle prices, and demand is, despite higher prices, demand is holding up with these little bit smaller inventories than compared to a year ago. So uptrend intact, no strong topping activity that looks like in the live cattle market. Feeder market, same thing there, continue to look like a market that has still some life to it. Softened a little from the highs that were established here 3 days ago, but again, a market that holds together well. The interesting market is the hogs. We had the summer months kind of surge right back up and pick up from 99 to about 105, and now back under 104. Just can't quite seem to decide which way they want to go, but it suffices to say, I think the hog market is more concerned about overseas demand than the cattle market is. And in part, that's because the hog herd in China had rapidly built back up and got to pre-African swine fever levels. And then I'll switch over in the dairy market real quick. I just can't get out of that. That I'm going to call it downtrend or funk or whatever. We had a couple nice up days, and we're toying with contract lows again. Enough inventory. Consumers are not running to the supermarket to buy dairy. The perceptive view of the dairy is, look, we're kind of past the key demand season, and we got spring flush coming down the road. So challenging environment right now for the dairy producer. Unfortunately, I think dairy producers are really good at what they do, and that's produce more. And so that may be the first step toward thinking about trying to increase revenue is to produce more.
Oh, and one thought on that hog market too. I know April took over as lead month futures this week. We kind of closed that premium between April futures and cash a little bit on Thursday. It's now about a $10 premium. So definitely some things to watch there in the livestock trade and the dairy market too. Great thoughts. Bryan, before we wrap it up today, any final thoughts you want to share with us here on the show?
Well, again, to your corn and soybean producers, just kind of remember where we are in the calendar. We're mid-February, and although the new crop prices are a discount to the old crop, they are still at a high level historically. So a lot of people kind of just waiting to see what happens. Waiting can get kind of speculative after a while in the sense that it's a risk. So if think about what it looks like if prices rally 25 or 50 cents in corn and 50 cents in beans, or if they drop off the same amount of corn or beans. And the corn gets kind of sticky pretty quick. So you have some conversations with your advisor, look at different type of strategies that might work for you to start defending prices. We're getting close to that time of the year where kind of that February, March, April, May window, that's sometimes our key opportunity window.
Well, Bryan, if folks have questions, want to reach out to you there at Total Farm Marketing, what's the best way to do that?
Yeah, what I'd ask them, just reach out to us with a phone call, 800-334-9779. So that would be my first ask. And then if you want to email it, Bryan with a Y at totalfarmmarketing.com, send me an email. Happy to answer that. Or look on our website, www.totalfarmmarketing.com.
Fantastic. We appreciate the time. As always, Bryan Doherty with Total Farm Marketing. Have a great weekend, sir. We will talk to you next week.
Okay, Jesse, thank you so much. Appreciate it.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.